Hey, what's up, guys? I'm very excited to bring you today's video. Today's video, I'm going to go over the put option. So in today's video, what I'm going to do is I'm going to run through what a put option is, why you should be using this strategy, the pros and cons, how you pick a stock that you should be selling puts or buying puts on, and then finally, I'm going to run through an example of setting up a put, specifically a cash secured put, which would be the selling side. Okay, so what is a put option? A put option is an option to sell assets at an agreed upon price on or before a particular date. If you reference back to my covered call series, it's generally similar, but this one is if you are buying a put option, you have the right to sell your shares at as a designated price on a designated date. I prefer selling options, and selling is the obligation to buy, essentially, right? So now, if you've gotten this far into the video, please go ahead and smash that like button. Comment down below your thoughts after watching the video or finding the Easter egg I'm going to place. And if you haven't already, please subscribe to the channel. I really appreciate it. So why would you want to sell, which again, I'm going to go into the sell side. Why would you want to sell a cash secured put? So with the puts, this strategy is going to generate immediate income to the seller, right? So if you sell the option, you're going to collect a premium. And so you're basically going to immediately generate some income on that position, right? And just like all options, if the price isn't kind of where you need it to be, then you will not be exercised and not be put the stock, and you basically get to keep that premium and you run away with it, right? This is typically a bullish strategy because, if you want to buy a particular stock anyways, why not sell a put on it and collect a premium? So basically what you're going to do is you're going to boost your potential returns, right? Because if you think a stock is going to go to $50 and it's trading at like 35, why not sell a $35 put, get assigned the shares, you collect that premium, and it's going to go up anyways, right? So with the next, I'm going to move on to the pros and cons of this strategy. So I've outlined the pros in basically 4 categories, right? You're going to generate immediate income, which is always great. So that's pro number 1. You get to pick your cost basis, right? So whatever the strike prices that are available, you get to essentially pick what your starting price is going to be. 3, you will get to maximize your profits, kind of what I just went into like a couple seconds ago. And then finally, it's a great way to use your excess cash, especially in an environment where interest rates are not high, where you're not having the benefit of a high yield savings account paying you additional yield on your cash that's sitting there doing literally nothing, right? Now, in an environment like today, it's a little bit more challenging because you have to find a stock with more implied volatility in order to squeeze out gains or like premium that will rival what the high yield banks are paying at the moment, right? Next, the cons. The cons are a little bit more complex, I guess you would say, right? So one of the pros, like I just said, was you get to pick your cost basis. That's also essentially a con, right? Because if you think about it, each options contract is 100 shares of the underlying stock. So if you get put a stock at your designated selected price, you're going to have 100 shares at that price. So it kind of destroys the opportunity to dollar cost average into a stock that you had previously wanted anyways, right? So I think that's one con. Another con that I see is it's very capital intensive in terms of from a cash perspective. To be able to buy 100 shares of any underlying stock, especially ones that you're actually wanting to buy, typically, you're going to need a couple $1,000s at least in order to enter into one of those specific contracts, right? So finally, the last thing that is a con, in my opinion, is the stock could end up ultimately making a run to the upside. And then when that stock runs to the upside, say you sold a a put option at like on Palantir, for example, right? Say you sold a put option at $15, right? And then all of a sudden the stock runs up to like $30. Well, the seller or the buyer of that put isn't going to assign you at $15 when the shares are trading at 30. So in that particular example, you might have been better off just buying the underlying shares and not selling the put, which is, again, it will lead me to say, if you actually want to hold the stock, I am very cognizant of that fact, and I do not sell an aggressive put. Meaning, for this particular one, if Palantir's selling or is at 1556, right? I might sell the 1550 put or the 16 put, thinking that's going to go up. So that way, no matter what, I get assigned the stocks that I am wanting to buy anyways, right? Which will lead me into, how do you pick a stock to trade puts on, right? And this is, the benefit of why they call it personal finance is this is where you can add your own flavor to the mix, right? How I utilize the selling cash secured puts is that I am looking to just maximize the yield I'm gaining on my excess cash that is literally sitting there doing nothing. I do utilize it from time to time to enter into stocks that I'm very bullish on, but in this particular market, I'm just looking to squeeze out yield and remain, cash heavy in the event that there's a massive pullback or I, for whatever reason, need that cash, for whatever reason that might arise. So as you guys have known, if you've been following the channel, I've been selling cash secured puts or covered calls, Wow, I was tongue tied this morning. I haven't had enough coffee, but I've been selling covered calls on Plug Power, right? So Plug Power, for the most part, has been range bound since around March, maybe April, to be honest with you, between around $7 and $10. So the reason why I have picked Plug Power to sell options on, I'm not necessarily bullish on the stock as a whole, but because of the implied volatility being high, typically what you're going to see is the premiums that options traders are willing to pay when selling options are pretty decent, right? So over the last 3 months, if you look here, they're pretty much range bound, right? Like for the most part, as high as 12, but I've been selling the options around April. So here it's basically barely moved, except for today, we've had a pretty decent run up, right? So usually what I like to do is whenever I pick a designated stock, again, depending on your strategy, if you actually want to own the underlying shares, then I select, picking a stock that you want to own safely, like a Google or an Apple or a Microsoft, right? But if you're trying to utilize a strategy how I am, where you're going to maximize your yield on your excess cash sitting there, I like to be a little bit more risky with it, right? So this is why I have selected Plug Power. One of the things that I like to look at when selling my cash secured puts is the Bollinger Band, which is a technical analysis to kind of show what range the stock is going to reasonably trade within two standard deviations, right? And this statistically should mean that the stock will stay in that range if you increase that band range. So for Plug Power, their Bollinger Band is basically telling me that the high end of the range in the last 3 months is not 3 months, 2.5 months, because I think I have my chart all the way back to April, the beginning of April, is going to be $9.87 on the high end and as low as $7.32. So that kind of dictates the range that I'm going to be looking at when I'm going to sell these options, right? So right now, the stock is trading at $10 and it's outside the Bollinger Band, which is okay because the Bollinger Band is just a statistical analysis to generally tell you where it should trade based off of the technicals. Now, the middle of that band is about $8.60. So if we scroll down here, this 850, you're going to see, it's basically only going to give us 5-cent premium. And again, 5 cents times 100 shares, it'd be about $5, right? So I'm probably not going to sell that one only because, $5 for, $850 in collateral, that's not even 1%, right? So this morning, what I did in my main portfolio was the stock initially dipped to around $9.16, $9.17, and I had sold the $9 put. But at that point in time, if you notice here, this put is down 66.67%. I sold it at around $37 per contract. I sold 10 contracts total, netting me about $370. So I waited to do the example, which I'm about to run through here in a second, in my Robinhood account, so I can show you guys how and what I'm doing in actually selling a cash secured put. So going back to my account, which I'm going to run through now, I have $1,300 in my account. The reason why I have $1,300, if you look at last week, I ended up getting my shares called away from me, which were Plug Power, at $9 a share, which gave me about $900, which I'll show you guys right here. Right here. So I got my call assigned, and they took out their little fee or whatever. So I got $899.98. So now what I'm going to do is I'm going to run through selling a cash secured put with you guys right now. I'm going to go down to my underlying stock. I'm going to hit trade options. I always like to sell 1 week options, so that way every week I can just kind of flip it around and maximize my gains. Here we've seen again that the stock has kind of run up this morning. Plug Power is up almost 10% just today. Tomorrow we have the inflation print for May coming in, which is projected to be a little bit higher than it was last month, as well as we have the Fed rate decision on Wednesday. So with that in mind, I think that personally, inflation print's going to be higher. There's a chance that Feds will increase rates, even though there's only a 30% chance that happens. So I'm going to be a little bit more conservative with my put here. So if I wanted to maximize my premium, I could sell this $10 put and put up $1,000 in collateral and get $51, right? That's a pretty decent put. But what I'm going to do is I'm probably just going to be on the safe side. I'm going to end up selling either the $9 or the $9.50 put option. So if I'm going to look at here, my delta is at 17, which is decent, but not the best. And if you look here, my volume is pretty decent, right? On the bid side, so what I'm going to sell at, there's 418 contracts available. And then the 950, this volume is a little bit better, right? 163. Did I say that right? Well, actually, it's a little bit worse, but that's probably because people are wanting to, kind of sell way up here. Let's look at this $10 price, 25, because it's underneath exactly what you're gonna get put at. Because most times when you want to do the puts, like I'm gonna maximize premium, the higher go out, but the potential is that the stock ends up falling. So just to kind of cut to the chase here, I would like to sell this 950 to put about $950 in collateral, which is, if you look back at my past series, is where I was initially assigned my shares anyways. But again, with all of the kind of economic data points that are coming this due, I think the stock is going to fall. I'm going to lower my premium a little bit, but that's okay. I'm going to sell this $9 put at $12, hit continue. I always do it at the bid price because that's typically where you're going to execute at. The ask is if you're going to end up buying this back, right? So I'm going to do review, swipe up, sold out. I got $12 credit. Scroll down here and you'll see the cash is taken from my account as collateral. Now, if that option, like say Plug Power stays, right? I'm going to scroll down to Plug real quick. Say Plug Power stays at this $10 range on Friday, then basically what will happen is this option will expire worthless. I'll get to keep that $12 and basically rinse and repeat next week. The only downside to where I sold my put would be is say Plug Power continues to run. Say it goes to $12, $13, $14, $15, right? Then, hindsight's 2020, but I should have maybe sold the $10 put or the $950 put to get a little bit more premium. Again, with the way that I'm utilizing the strategy to collect yield on excess cash sitting there. If I was very bullish on Plug Power, I probably would have sold the 10 or the 1050 strike price to basically maximize my premium, reasonably assuming that the stock will roar higher. And then not only do you lock in this either $51 or $83 gain, but you're going to be in a stock that you are bullish in anyways. I think I basically covered a little bit of everything. for how puts work, at least from the selling side, because in my opinion, selling options are a lot better and a lot safer than buying options. Hope you guys enjoy this video. If you're still here, that Easter egg I mentioned is going to be why. Comment why in the comment section below. And that way I know that you guys are here. You're my most loyal subscribers. You've probably already smashed that like button. If you haven't, go ahead and do that now. And I will see you guys on Friday with a market update, as well as a status update on, this options contract I just opened. Hope you guys enjoyed the video. I really appreciate you guys. Have a wonderful Monday morning.